So I've come to find out that the Franchise Tax Board doesn't do a lot of standalone audits, meaning they like to piggyback off the IRS. I think Eric and I have had this conversation before.
So everyone, listen, thank you for joining us on this week's Tax Rep Network podcast. I'm Eric Green. I am being joined by one of our trainers, Leighanne Lafrenz Nickle, who is a CPA in California, who I've known 10 years at least, I think. And what prompted this conversation, and we were on a Zoom just talking about some of the crazy stuff that comes up, and that, everyone's afraid of the IRS, right? Everyone's afraid of the IRS. No one really thinks about the state. And I've had similar experiences with Connecticut. You have with California. Fear the state. The state is fucked. I mean, I'm going to be very blunt, everyone. Apologize. The state's nuts. Connecticut.
Yep.
We don't have much guidance. What guidance we do have is really kind of that you'll have the Department of Revenue people tell you, well, we don't have to follow that. That's just kind of like a recommendation. And so they will come up with and contort themselves into all kinds of positions to try to figure out a way to get the client to owe more money. I just thought it'd be really interesting if we could let the audience know about some of this, that first of all, you're not alone. If you're wondering, Eric, and by the way, I've heard this, Florida, Illinois, New York, they're all the same. Most states do not have the formal processes that the IRS has or the taxpayer protections. I think it was your first case.
Yes. Yeah.
Yep.
Yeah. My very first experience with California insanity was in 2018 or 2017. Actually, it was my very first case I ever. A lot of you have heard about this case. I've actually turned it into a webinar that Eric and I presented. It's a great case. I've used it for a lot of case studies, and I was super green, so I really had no idea what I was doing. So I walked into my client's office, or restaurant, actually a restaurant client, and if you ever hear the words, as I always say, oh, by the way, and your client hands you a piece of paper, that's usually your cue to like run or, be prepared. So they were getting an audit from the IRS. Now, it actually started originally prior to me even knowing them in 2016 with the California Department of Tax and Fee, which previously was the Board of Equalization. So when cannabis became legal in California, the BOE went one way with other taxes, and the CDTFA was formed in order to do some of these cannabis taxes and other sales tax and stuff like that. So that's kind of the history with that. So it was the BOE when I was dealing with them, and then they have now transformed into the CDTFA, which is California Department of Tax and Fee. I don't know why they can't make it shorter, but here we are. So anyway, and what happened is my client had a restaurant, and they were scheduled for a sales tax audit. I don't know the dynamics of a lot of it because, again, I wasn't there at the time. So a sales tax auditor from the BOE at that time walked into their restaurant and said, we're here to audit your sales tax, and we want to download your point of sales, all your information off your server. And my client let them, right? Not supposed to be, that's not a good thing to do, right? So this auditor let them download everything, and the auditor didn't even really ask for anything out, and he just like walked out. And the next thing they know, they get this bill for $200,000 of unreported sales, along with penalties, interest, and the whole ball of wax, for a total of $65,000 is what they paid. And they paid it. Their previous tax person at that time told them, oh, you better pay it. They're right. So then it transformed. So since they were a Schedule C filer, it transformed into the California department decided to share, a courtesy to share information with the IRS. So then it transformed into an IRS audit. And that's kind of where I came into play. But to backtrack to the sales tax, so when I received the work papers from the audit. Some of the things were redacted, but the most of it I was able to back into because my formal training was I came from private accounting and I went to public accounting. So I kind of did a reverse. I was a controller and accounting manager and, all that wonderful kind of stuff way back. So my accounting skills and my audit skills are fairly strong. So when I received this, I did my own audit of the client, right? And I found $2,000 of unreported income. And what's interesting about this is the work paper showed 2,000 or 200,000, like on the nose from the sales tax audit. I'm like, 200,000.0. I'm like,
That is really unusual.
yeah, it's not, that's not even the probability of that is like, I would probably go bet today on the lotto if that. So I came up with 2,000, not even joking. So I came back to the auditor and said, all right, we'll take the 2,000, but that's the IRS thing. But in my opinion, now we never went back to the BO. I wanted to go back and put in a claim for refund because once I won the IRS audit, and then subsequently, of course, the Franchise Tax Board. So the sales tax, when, Schedule C affected their income tax in California
Right.
and their IRS tax liability. The Franchise Tax Board, I found when I sent in the information from the IRS, I remember talking, and I had to reopen. It was already expired. I had to go back and reopen the audit because they were also being audited by Franchise Tax Board, but my client just kind of ignored it. So I had to go back and reopen. I wound up calling, or I think I sent a letter. And again, I was green. I didn't even know what the processes were. I just shooting in the dark here. Sent a letter. They actually called me and I told them what was going on. And they said, just let us know. We'll just agree with whatever the IRS says. Like they didn't even want to audit anything. So I've come to find out that the Franchise Tax Board doesn't do a lot of standalone audits, meaning they like to piggyback off the IRS. I think Eric and I have had this conversation before.
Yep. Same with the Connecticut Department of Revenue.
Yeah, they're too lazy or something, I guess, in order to go in and pick an audit. I think they are auditing more of the businesses versus individuals as far as that goes. So I don't think that I don't think they're going after a lot of individuals. Now, I'm going to tell you where they are going after a lot of individuals. So California the Franchise Tax Board likes to run fast and loose with SFRs. For those of you who don't know what that's, substitute for return. Okay. In IRS, it's 3 years. California is 4. Okay. They can go back 4. So they like to do substitute for returns, like I was saying. Now, I learned about this in 2018. I have an older daughter. She actually currently works for me and she does the majority of my tax work. But at the time, it was in 2018, my business was 1 year old. My daughter started working for me. She had just graduated from college. And prior to when she worked for me, she did hair, meaning she was a hairstylist, cosmetologist, and she had a license with the Bureau of Consumer Affairs. The same licensing that issues my CPA license. It's one umbrella, and then they have all the different divisions. So mine's the Bureau of Consumer Affairs, the Board of Accountancy. Hers is a Board of Barbering and Cosmetology, and so on and so forth. So what I've come to find out, in 2018, my daughter got a letter, and it said that they were looking, that she did not file a tax return because it shows that she has a license with barbering and cosmetology, and they want to know where her Schedule C is. Well, or a W-2 or something showing that she was working in that industry. And she didn't send one in, they were going to make one for her. That's basically right. So they like to match everybody's licenses up. And this is the majority of the actual audits that I'm getting right now are mainly these. So this is where they're nailing the individuals. If you have a license in California, you don't file a return, they're going to file it for you.
Right. Again, because of limited resources and everything. What the lesson I think from all of this, for those listening, the state is going to try to, first of all, they all need money. Every state is fucking broke. Every state needs money. 2, they're being told, go find money. The other thing is it's easier to audit a business. Nobody cares about a business. Individuals have a tendency to scream and call their Congress people, or their state reps. And so the other thing is like that sales tax. They do a sales tax audit, same in Connecticut. If your client just agrees, we'll take it, turn it into an income tax. You've agreed. You've admitted it.
Yeah,
so that's
exactly.
the income tax, they don't have to do an audit. They've already done
Oh,
it.
it's already there.
Yeah.
It's already
Yeah.
done.
Here's your bill. That's why if you are if you're a business owner listening to this, you have to fight these things.
Yes.
And if you are the CPA or EA listening to this, your client's got to fight this. Because I've had this where clients like, look, let's just pay them the sales tax. I said, all right. When they turn it into an income tax, they're like, whoa, wait a minute. And by the way, the state of Connecticut, with the information sharing with the IRS, the state of Connecticut takes the position they will make it available upon request. They will not automatically send it to the IRS. California will. Some states will. So which means you have sales tax. That will become an income tax, and that's going to become a federal. So that $200,000, $65,000 here, there, before you know it, now it's $200,000 owed.
Right. Well, then it snowballs into they've got the 65 from the sales tax. Then when they do the 568 LLC return in California, then they'll get the income tax from the unreported income from that. So they're probably looking at collecting 100,000 just from that, just from an auditor walking into somebody's restaurant and downloading the server.
Right. And because, it's very simple. Obviously, everything's fully taxable. You wouldn't have any non-taxable sales. And so we've had that. I have one here. Connecticut did away with this, but we used to have an admissions tax. So kind of similar to sales taxes that you paid for admission to access. Like think of a carnival. Yeah, you pay it there and then you get access to whatever's there within the fenced area or something. So it's during COVID. It's 2020. The auditor sends a bill. This is a large retail store. In the middle of the store, it's like a climbing wall, and there's like a little merry-go-round thing, and there's they have food and whatever. And so I'm speaking to the client. So they sent them a bill for over $2 million because what they said is you didn't pay your admissions tax. You've never filed. They went all the way back. This is what Connecticut does. All the way back to the beginning of time when the store opened, even though they weren't even in the store. The company that runs the little climbing wall concession thing and mailed them a check. Took all their gross receipts, subject to admissions tax, and sent it. Except that there's no admission. They don't charge anything.
Oh, it was during COVID. It was shut down.
So what happens is I filed the appeal saying the auditor never physically went. They couldn't have. No admissions being charged. The admissions tax on the charge for the admission. It's open to the public. And as mentioned, we have videoed this with our phones if you want to see it. There's no admissions. Therefore, no admissions tax due, and this has to be expunged. You get a letter back from the auditors when they receive this. They give you an informal conference. Now, usually these are a waste of time. However, I happen to know.
I've got a couple of informals.
And this is one that I'm almost like I'm dying to and by the way, I'll tell you another story. So this person, name's Michael. He used to be an appeals officer. He's now head of audit, but he used to be an appeals officer years ago. Well, my law partner at the time, who's now deceased, Bob Percy, they went in and they audited. It's like a supermarket, but it's a market. It's like a neighborhood market. They got fruit, vegetables, and meat, whatever. And food is not subject to sales tax in Connecticut. Candy, soda, and prepared meals. Something that
package, prepare,
So they pick up on the hams. The hams are smoked.
I remember this.
And they charge sales tax on this. And so Bob tells me, like, we're going to go to, I'm going to show you how we're going to handle this. He goes to the store and he buys a ham. He's feeling them all. Like, what are you doing? I want the one with all the juice. And he goes and we take pictures of he tells me with the phone, take pictures of the market. Now, way back when I finally had a phone that would take a picture.
Right.
We have the appeals hearing. Back then you went in person. We go in person, the appeals officer. He takes the ham out and he opens it up and the juice and everything runs all over the conference room table. And he said, the pictures will show there are no tables, there are no chairs. you would have to eat this in your car.
Right.
Are you
Or
suggesting
sit on the floor and eat it. Yeah.
that somebody would go and eat in their car? They admitted no, they wouldn't. So Bob
Not a
takes
whole ham.
and leaves the mess all over the table. So I tell you that I told you that story to tell you this one. So now with the admissions tax, I have this with Michael. And I said, Michael, your auditor never went. He couldn't have. There's no admissions. We don't know what you're talking about. You honestly, it would have been better off just making something else up. And he tells me, he's like, Eric, I reviewed the audit. I'm good with the audit. I said, Michael, don't make me come down there with a ham. And he starts laughing. And I said, we're going to go to appeals. This is ridiculous. He said, look, Eric, this is the bullshit you get. And I like him, don't get me wrong, but this is the bullshit you get from the state. Eric, look, it's COVID. We're all working remotely. I have a lot of flexibility to settle this. I said, Michael, I'll talk to the client. I said, but I'm going to tell the client right now. I can tell you right now, we're going to spend $20,000 going to appeals and litigating this. You're going to win. I would advise them to settle for the 20. So I'll see if they're willing to settle, but I can tell you right now, it's going to be closer to my 20 number and not near your $2 million number. He said, are you looking for 2 million or are you looking for something closer to my 20? And he said, the latter. That tells you all you need to know. This is a shakedown, is what this.
No, that's exactly what the sales tax is.
They know the audit is bullshit, and they know the audit is bullshit. And so
just hope you pay it and walk out and go away.
Right. And so what they're going to do is they're just going to get whatever they can get. So I called the client and the client said, well, that's fine. But what if we're admitting this? Literally 2 days later, the Connecticut repealed the admissions tax. So,
nice.
So timing is everything in life. And I called them, said, Michael, spoke to the client. They've told me to make an offer of 20,000 to settle this. Now, remember, it's just under 2.1 million.
Mm-hmm.
I don't hear anything for about 2-3 weeks. In the mail, we get the closing agreement for 20,000.
Okay, there you go.
So the point is,
winner, ham dinner.
well, right. The lesson, first of all, if you ever get that one with the market, take a ham. Anyway, no, in fact, I used to do this talk when Bob was still practicing and alive. And I actually put up a slide, bring a ham to the appeal. And I had a picture of one of those spiral hams. And I had a picture of Bob. And Bob would look at it. Bob looks at it. He looks at me. He's like, I resemble that remark.
Yeah.
Anyway, you've got to fight these things. I know that the
you
people,
have to.
the state auditors, they know
and
they are not. You know what? It's like the federal IRS offer specialist. You would think that an offer specialist, by their title, would specialize in offers. Compromise. How many of you seen where they don't seem to know what the hell they're doing?
No. Yeah.
And so if you're listening, first of all, if you're a business owner, make sure you hire representation that does it. All right? Because I'm just telling you, it makes all the difference. If you're a CPA or EA that doesn't really do this, find someone that does, but I got to tell you something, come into tax rep and get trained, because you can do a lot of good for people and make a good living doing it, helping people sort through this stuff.
Yeah, we'll teach you how to do it. I've got enough work.
Well, no, but I've got more crazy stories. So I'm going to let you go next because I got another one.
Okay. So this was, again, a very interesting one. So Eric's got the ham story. Well, I actually had a client that had a gentleman's club. And yes, I know it, they're also subject to paying sales tax. And I remember the auditor was a man, obviously. And obviously I'm a woman. And it was my client that had this. And in the state of California, so at the gentleman's club, the dancers are either topless, they can have alcohol, fully nude, no alcohol. Okay, that's the rules, right? Whatever. Yeah.
Who knew?
I don't make them up, I'm just there. So anyway, so they're selling drinks, right? And they charge like a flat fee of like $6. So this client was getting an audit for their sales tax because they obviously pay, sales tax on that. And so we were arguing over, the markup and all this kind of stuff. And what California Department of Tax and Fee likes to do is they like to do an average. You could send them an actual and it would tie out beautifully. And again, I'm a CPA. If everything ties out, my life is complete. So I tied it out and, to what it's supposed to be, the rate and the whole thing and, spreadsheet for days and all this kind of stuff. And they will like virtually ignore it and take an average. And I'm like, how in the world can you justify this? It's just they're just trying to create, more revenue, right?
Right.
So that's what they were doing, and they were saying, "Oh, they're not." So they were saying that because they were mainly targeting the drinks sold during the day shift period, which is a lot slower foot traffic wise, I would think. Not that I'm a frequent flyer, but of these clubs, but during the evening, I would think, or even the weekends. So I wound up having to go and sit in the club, and I was like almost like starting to count drinks and stuff. Now, video, unfortunately, was not not an option for me because of, obviously for privacy issues. But when I came back and I told the auditor that, he didn't believe me. And I told him, I said, all right, we're going to go. And so him and I went together and we sat there together and again started counting and I told him, I said, now if you get a lap dance, I'm out. Like the whole thing. But I wound up actually winning that because I brought him in, like same thing like the ham, but it's the same kind of story, and there's a lot of colleagues I knew who won't touch, that kind of industry. And I'm like, look, it's just another sales tax thing to me. It doesn't the whole thing doesn't really bother me, but it was fine. So that one went fine. And I think I told you, Eric, I have one now, which is actually a CPA firm that hired me because I had mentioned this they're auditing the number of returns versus their gross revenue. So stating, I think I had told you this too, that they don't think that they're basically now the state of California is telling them, you're not charging enough. How many times have we all said that? So they're trying to, so that's a new one. That one I'm still working on at the moment. Yeah, that's a very interesting one because I'm thinking to myself, how can they how do they justify this? Like, I just,
On the one hand, part of me thinks, well, that's an easy one. Get the listing of every return filed.
yeah, no, I got that. Yeah.
Directly trace it to every payment. The only thing they could imagine would be someone came in and gave them cash and they pocketed the cash. But, it's whatever. No,
Well,
we,
I mean,
yeah.
I get cash, very little, but I do get it. But we still mark it paid and put cash. So it still is recorded as revenue,
Oh, yeah, you would, but that would be the only argument for the auditors. How much
Exactly.
they not report.
Yeah.
Um,
Hmm.
no, we had one. They went into the bar and they get this report, $100,000 sales tax owed. It's a small place, and I'm going through the report, and I was sitting there at the bar with the owner, and I said, "The beer glass."
Yeah.
'Cause I'm looking there. I don't know if you've seen the official Guinness pint glass. I have some. A friend of mine who from Ireland sent them to me. I think they're 16 ounces.
Okay.
I said, 16 ounces. He said, yeah. I said, auditor is basing it on 8.
Oh.
That's a problem.
Mm-hmm.
Then the other thing is he's basing it on the amount of alcohol, 1 ounce per, and the drink that he took as a test, Sex on the Beach, which,
Yeah.
if you're not a bartender, has 4 different
Alcohol
types
in
of
it.
booze in it. All right.
Yeah. Like a Long
So,
Island iced tea has like 6 or 7 or something.
so I
Yeah.
take pictures of the bar with the glasses and all this stuff,
Yeah.
you know, saying that we don't owe you anything. And I point this out, and the appeals officer, who I was friendly with, he's now retired, picked up, and his first thing out of his mouth, he said, Sex on the Beach. Of all the drinks he was going to pick, that's the one. I said, the guy doesn't drink, obviously, because anyone who drinks would know, yeah, that's not a good one to pick.
Yeah.
And he said, yeah, I saw the glasses. They do look like 16 ounces. I'm like, yeah, they're the pint.
Yeah.
And so we ended up settling on like $9,000 or something like that, some
Yeah.
rounding error, whatever. But Again, when you're dealing with the state, and you mentioned this, they want an average. I find that they will go to industry standards when they
Mm-hmm.
don't like your actual numbers because they're
Yeah.
trying to come up with. I know this sounds, it's disturbing in a
It's
way that the,
predatory.
yeah, that the
I think it's
state is
downright
effectively,
predatory.
it's a shakedown.
Yeah,
It's legalized extortion is what it
it
is.
is.
So I'll tell you, I have a company. The company's north part of the state. They are a manufacturer. They are the only manufacturing company in Connecticut that is growing. So they build a brand new factory. They move in and they're only occupying about 40% of it because the idea is to keep growing, right? Continue to, use more. Auditor comes in, everything ties out, tells them, look, this was pretty simple, straightforward. A week later, calls back and tells the owner, my manager wasn't really happy with the audit report. We're going to be making some adjustments. We'll send it to you. They send it to them. They come up with like 10 grand or something small. And by the way, that is small, but they're only a 40% manufacturer. Therefore, they lose their manufacturing exemption. They owe sales tax.
Oh, mm-hmm.
Because their rationale, they're only using 40% of the warehouse, the facility. And it's ridiculous.
Yep.
So I told him, I said, look, we can go to appeals, do all that. I said, but I have a different idea. And this is one of the lessons I want people listening to take away. The IRS really doesn't bend to political. You can call your congressman, they will send a letter over. But IRS, and IRS generally doesn't extort people, they'll stick to their guns. The state really will bend to political pressure. And
Yeah.
so I told him, I said, look, and we still have our appeal rights, all that, but here's what I would do. I think you should call your state representative who happened to be head of the finance committee here in Connecticut. I mean, I know because I looked him up. I
Mhm.
said, I would call him and I would tell him this, explain what happened and say, if this is what you're going to do to me, you know what? Fine. I will pay the bill. I am going to hold a press conference and explain to everyone we are leaving Connecticut. I'm going to accept the offer from Rhode Island, 10-year, no property taxes, no sales taxes, and I'm moving up there and I'm laying everybody off because will not do business in Connecticut. And he
Mhm.
said to me, he said, we spoke to Rhode Island like once, but they never offered anything. I said, doesn't matter. Tell him that anyway.
Right.
He called up, told them, state rep told him, do not do anything. I will get back to you. Called the governor's office. What the are you people doing? I know because someone at the DRS told me. They called the commissioner. What the are you people doing? Really? They called him back the next day. They're reissuing the report. He keeps his manufacturing exemption. However, they have the right to come back later and review it in a future audit. For those of you who can't see the video, I just flipped. I'm not
Yeah.
flipping off Leighanne. I'm flipping off. You know
No.
what I get.
Yeah, exactly. You
Point is,
can, yeah, give him the bird.
right. The point being that, and listen, we've had plenty of audits. They go perfectly fine. All right. But what I have noticed, and I think Leighanne, you've noticed, is where they come in and the person has good records. It seems like they're trying to find another way to
Yes.
come up with something.
I know they do. It's like they make it up as they go along. And like me, when I prepare anything for my client, I have extensive work papers, extensive Excel spreadsheets. Again, I'm a CPA. I like everything to tie out in a nice little bow. And if it, doesn't, it makes me crazy. So I like everything because if they come back, I want to be able to look at my work papers. Where did I come up with this number? Kind of thing. Because it can get really kind of convoluted.
And remember, when you have to pull this stuff out and explain it, it's not
Yeah.
like in 3 months, it's a year and a half from now.
Oh, yeah, no, it'll be like a year to 2 years or something
Yeah.
like. Yeah, exactly. It's
Who
not
the hell
gonna be like.
remembers what was said?
Yeah, it's not gonna be 2 months later. Yeah, no, definitely. And then now, I know that we've been talking about how predatory California can be. Now, conversely, which I find a little incredible, there is a little known program that just started in 2019 that a lot of people don't know about California. So I don't know if you know. So if you form an entity in California, an LLC, S corp, C corp, something like that, that requires registration with the Secretary of State, you have to pay $800 a year. So there's an $800 fee.
Yep.
Doesn't matter if you make $1 or no dollars or whatever, you have to pay it.
Yep.
A lot of my clients fail to pay this. They forget, or in the whole madness, and this kind of goes along with the BOI kind of situation. But they'll form all these entities. People will do this thinking they're gonna start this business, and then they never dissolve it. And then the next thing I know, they're getting this huge tax bill, right? For these $800 that have accrued and accrued and accrued and accrued. And then these people are getting their tax returns, their bank accounts levied, and the whole ball of wax is happening, right,
Yep.
over this. And the people are like, I don't know. And
If you're in
that came to my,
if you're in Massachusetts or New York, your driver's license can be suspended.
it just goes really sideways really quickly.
Right.
So what California did, surprisingly, which I thought this was one of the better moves they did, is they created what's called a voluntary dissolution program. So what this means is you fill out you fill out a form. It's a 3715 for a corp, 3716 for an LLC. And you're basically attesting that, there's no assets, there's no business, there's no this, there's no that, there's nothing. And you send it in as a voluntary dissolution, and it really doesn't matter. The biggest one that I had literally wiped off the map was $56,000, right? This guy owed from all of this accumulation of all these fees over years. And I got it all gone. Like they don't even ask questions. They just want it gone. And I think it turned so I had asked a couple people, and I think it's costing them more to enforce it or collect it than it is for them to just get rid of it. And that was my first case when I found this out, was the 2019 when the program first came out. I think I filed it within 2 months after they opened up the program, was this first case, and that was the first one, $56,000. So I really am trying to get this out that, we have clients that do this. They open up these entities and they don't do shit with them, and they just sit there forever and collect, and then they got to pay $800. Everybody likes to go run out and get an LLC. Why? I don't know, but they do. So that's conversely another way that you can actually, get money removed for your client, and your client doesn't know that it's really a very simple process to do this, but they're going to love you, for days, especially if you can get $56,000 gone,
Right.
without really having to prove anything but fill out a form,
Yeah.
and everything. And they'll dissolve it for you, To me, that was a great program.
Yeah. No, every now and then they act very pragmatically.
They do.
Yep.
Because I remember talking to the guy in 2019 when I did this. I asked him, I said, why are you guys doing this? And he was the one who told me, he's like, well, I think it's a cost benefit analysis for getting things, collection wise. So because the Secretary of the State is the one that you pay, but the Franchise Tax Board is actually the collection enforcement for the Secretary of State. And everything just, they'll just levy you to death. And like I was talking with the SFRs, I just had a case I told Eric where a guy, again, had a real estate license, and he did not file taxes for several years. What was it? 6, Denise? Something like that. You know what? One guy.
I think it was 6.
6 years. He didn't file. And so they took out like $35,000 or something like that. And what they did was they took his mortgage interest statement, his 1098, and they took the interest amount, they multiplied it by 6. And then that's now the income number that they make up. So that's what they're assuming in order for you to pay this mortgage. That's how much money you have to make. So if you don't file a return, we're going to help you. They're ever so helpful. And they're going to file it for you. So he had like all this money, like basically like zapped out of his account. And this doesn't happen overnight. They send, this is people are getting letters. We all know this, right? Well, he came in to see me, and I actually filed his returns, and he literally got his refund back about 3 weeks ago, or a month ago or something. He's like, oh yeah, they sent me this check. He brought me this check, and he shows it to me, and he's all nervous. So I'm like, cash it. That's your money. Right.
And
So,
I got to tell you, there are some states, once they file that return, if you don't challenge it, like Connecticut, you have 90 days to challenge it. It's final. They will not reconsider it. They will not reopen it.
oh, you can't even file a replacement or
Nope.
no?
Nope.
Hmm.
Done. They have a return and you missed your opportunity. Florida is the same way. And so for like sales tax, they do an audit. You don't challenge it. And you come, like I had a company call me. It's $500,000. They
Yeah.
probably owed 50 or 60 grand. I start looking, Florida has no means for audit reconsideration or a doubt as to liability offer. And I spoke to some folks who practice down there. I referred them over, and they said they have kind of a backdoor way to get to someone who can abate it. But technically, there is no program in Florida. You're stuck.
Now,
And
the only thing with California is you have 1 year. So 1 year from the overpayment. Now, it's not from when it was paid. So if they levy you for 2017 in 2024, and if you put in the claim for refund or file the return, which in essence is kind of the same thing, you file the return as it should be, that's basically your claim for refund. They'll send it to you. But they have 1 year. It's 1 year. It's very, very small window. So, yeah.
no. So, I mean, just because we're running on time, the takeaway for everyone listening to this is I know everyone's concerned about the feds, the IRS. The state is not a joke, and the states are. I mean, I'll be honest. If you come to me and you have a balance due to the IRS that you don't owe, we can fix that. Audit reconsideration, doubt as to liability offer. You could pay it and
Mhm.
seek a refund. If it's open for collection, we can submit documents. Now, you may not be able to get a refund. We may be beyond that. But the point being is that it can be fixed. The state does not work the same way. And I when I do this talk, I'll often tell the audience, everyone's afraid of the IRS. Screw the IRS, fear the state. Because and I'll tell people, please pay the state, pay the sales tax,
First. Yeah.
withholding tax. I said, my partners can screw all your other creditors, all right? But
Mhm.
they in Connecticut, they theoretically have an offer and compromise program. They really don't like taking offers.
Mhm. Same with California. It's there. It's not they don't strongly advise it, kinda thing. I always tell my clients all the time, pay the state first,
Yep.
right? And as Eric has also talked in some of his other OIC workshops, pay the state first before especially to increase an offer and compromise, especially when you get on a payment plan. That actually helps with the IRS. We've talked about that before. But the franchise tax board can be a little squirrely, but in my opinion, the CDTFA, the sales tax, these fools do not have a soul. I don't think they have a soul, and they'll take your firstborn kid. I'm telling you, they'll drain the blood out of your body if it'll pay for it.
Well, and look,
And they're hard to budge. They
and
dig
in their
in.
defense, I've had plenty of people come in and they owe the money. They just didn't pay it. They
Yep,
collected it, never paid it. You know
correct.
what? I got to be honest with you. You're stealing. I mean, effectively, you've embezzled. I know you don't think of it that way, but you've embezzled the state's funds,
It's held in trust like payroll. It's basically trust fund taxes like payroll
right?
because you're held in trust, and the owner could be liable just like payroll.
They are. I mean, here for collected sales, even if you didn't collect it or charge it, sales tax and payroll tax is a trust tax. You're holding that in trust for the government,
Mhm.
and they take it pretty seriously.
Yep. Yep. Exactly.
No.
So,
Well, listen, thank you for doing this. It's always fun to
yes,
talk about the horror stories.
right?
And
We've
thank
got
you.
many more.
Oh, yeah, no, we'll do a part two to this. But
Yeah.
and thanks for everyone for listening in. And see you next week on the podcast. And Leighanne, thank you very much.
Always a pleasure, Eric. Thanks.